Most traders lose money because they can't recognize chart patterns. But the truth is, the market keeps repeating the same shapes over and over again. In this video, I'm going to show you the top 5 chart patterns that can literally print money if you learn how to use them. And don't worry, I'll explain everything in the simplest way for you. Welcome back to AFTechTrades. If you are new here, I make simple and effective trading strategies to help you become a better trader. So if you want to learn how to trade Forex, gold, or even crypto, make sure you subscribe and stay tuned. Now let's move on to our strategies. The first pattern is the double top and double bottom. A double top looks like the letter M. Price tries to break a resistance level twice, fails, and then drops down. This usually signals a reversal to the downside. A double bottom looks like the letter W. Price tests a support level twice, fails to break it, and then shoots higher. How to trade it? Wait for the neckline break. For a double top, enter a sell when price breaks below the neckline. For a double bottom, enter a buy when price breaks above it. Next is the head and shoulders pattern. This is one of the most reliable reversal patterns. It has 3 peaks, the left shoulder, a higher head, and then the right shoulder. Once the neckline is broken, the trend usually reverses. Inverse head and shoulders works the opposite way and signals a move up. Always wait for the neckline break before entering. The third pattern is the flag and pennant. These are continuation patterns that usually happen after a strong move. A flag looks like a small channel moving against the main trend. A pennant looks like a tiny triangle after a big move. How to trade? Enter when price breaks out in the direction of the original trend. It usually means the market is about to continue strongly. The fourth pattern is triangles. An ascending triangle shows higher lows pushing into a flat resistance, usually bullish. A descending triangle shows lower highs pushing into a flat support, usually bearish. A symmetrical triangle can break either way, so watch closely. How to trade? Wait for the breakout and enter in the breakout direction, with your stop loss just outside the triangle. The fifth pattern is the wedge pattern. A rising wedge means the market is moving up, but the trend is getting weaker. This usually leads to a bearish reversal. A falling wedge means the market is moving down, but the move is slowing. This usually leads to a bullish reversal. How to trade? Enter when price breaks out of the wedge in the opposite direction. So let's quickly recap the 5 chart patterns that can print money. Double tops and double bottoms. Head and shoulders. Flags and pennants. Triangles. Wedges. If you master these patterns, you'll start seeing opportunities everywhere on your charts. Thanks for watching. If you found this video helpful, smash the like button, subscribe to AFTechTrades, and hit the bell so you don't miss the next strategy video. Until then, trade safe and stay consistent. Click this video showing on your screen now to watch each pattern video independently in full details and complete strategies.